Hello and welcome to today's daily market recap. Today is 23rd of September 2024 and it's Monday. So like always, before we begin our market analysis, I would like to point out that I use a couple of concepts when I analyze the markets, and those are previous day high as well as previous day low. I look into the candle formation, which is open high low close and open low high close, as well as the power of three. We look into the times as well, as it's very important. I'll refer to the fair value gaps, SMT, and then use standard deviation to get an estimate on the profit targets. Okay, so before we start, let's go ahead and look into the weekly chart. So last week we closed out bullish, and our idea still stays intact that I want to see this swing high to be taken. So right now we just completed Monday, and going into the week, I really want to see this high to be taken. All right, so let's move down to the daily chart. And if you look at the daily chart, we have a daily busy, which is buy side imbalance, sell side liquidity. It's right here. And you can see when this was formed, the couple of days later, we can see that the imbalance was completely balanced out. So we do not have any business coming down here again. Another busy that we saw was here. And we never came down to this level. And this is right now a breakaway gap. So my idea is to see price head to this high, and we take out this high, and then we can see whether the price wants to come down again to the discount levels, like for example into this busy, and then continue higher. So that is something that we'll have to see in the upcoming days. But for now, I'm still bullish because I really wanted to see this swing high to be taken. However, going into today, if you look at the previous day, that is Friday, so the bullish candle that you are seeing is the candle that was printed today. The another candle that you see here, which is in the formation round right now, it's tomorrow's candle, and that is Tuesday's candle. So we are analyzing the market for today, which is this bullish candle, and this has already been printed. So if you look at the previous candle, which is Friday's candle, you can see Friday did not take high of Thursday. So Friday did not take Thursday's high. That means that going into Monday, I am going to be bearish because Friday did not take Thursday's high. However, once you see a large wick on a daily candle, we have to be a bit careful. And the reason is we might come down a little bit and then start expanding higher. So how far bearish we would be will depend if we are crossing the mean threshold of that wick. And so what I like to do is I'll take a 50% of this wick, which is nothing but the mean threshold of this wick, and try to see if price actually purges beyond this 50%. So let's say if the price goes down beyond this 50% and then continues, then we definitely know that we are bearish. But if you can see, we barely came close to this mean threshold and then the price got rejected. Again, it's Monday. That is why we expect accumulation to happen. So we have to be a bit careful going into the day as well. So going into today, I was not bearish or bullish on my daily bias, but I had an idea that I wanted to see if we are truly bearish, then I wanted to see the mean threshold of this wick to be broken so that we can expect continuation lower. Or else I would like to see this mean threshold to be respected if we are truly bullish. And that's what happened today. So let's go down to the 4-hour chart to see how the 6 a.m. candle formed, because I really pay attention to the 6 a.m. 4-hour candle as well as the 2 a.m. 4-hour candle to predict where we are going to be in the next 4 hour after 10 a.m. So you could see that this was a 2 a.m. candle. We had a large wick. And then we had this 6 a.m. candle. And you could see the 6 a.m. candle did not close above the high of 2 a.m. candle, which makes me bearish for 10 a.m. Okay. However, if you see, this is the wick that I was talking about as well. It's a large wick. So if we are truly bullish, even I want to see this mean threshold of this wick to be broken for us to continue lower. Let's go down to the 15-minute chart to see exactly what happened. So before that, we'll analyze the times because times are really important, right? Okay, so this is our Friday's high, which I have marked here, and we have Friday's low marked here. Okay, so let's start with the daily open, which is our 6 p.m. open. You could see price moved a bit higher and then we went lower, and then the price started expanding higher and it continued expanding to a point where we reached this high, and then you could see the midnight open. Now one thing that I want you to analyze here is the number of points that it has moved. So if you look at it from midnight, right, so we went, this is the high of the day and this is the low of the day. So just between our daily open to midnight open, we had already moved 167.5 points, which is a very huge move. So typically when you have a large move before even London starts, there is a likelihood that you will have a choppy price action. And I can show you how the price and time correlates here. So since it's Monday, let's go down to 5 minutes to do our analysis. So I'm going to go down to 5 minutes. And then we'll focus on that same time again. You could see that this is our 6 p.m. daily open. We moved lower and then we started continuing higher. So if I consider this as the manipulation leg for the day, then you could see that our targets are -2 and -2.5, and we perfectly reached this target. So once we reach the target, I really want to see price aggressively close above this -2.5 standard deviation. If that happens, then I'm going to target -4, which is max expansion. However, it didn't happen and we could see that the price started moving lower. Okay. Another most important thing is whenever you have your 6 p.m. open, I typically expect your midnight open to be in a close range. The idea is if the price is trending higher or above your midnight open and daily open, then you can form trade ideas to go short because you are considered to be in the premium levels. And this is what my observation has been. So let's say if the price is trending lower, right? I mean, at that point of time when market opens, you see that the price is lower than your daily open and midnight open, then it is a good idea to look for a long position because you might be into the discounted levels. But if you look at this, we are not close by any means. So the points difference between midnight open and daily open is almost 106 points. That's a huge range. So once we met our daily objective, which is this -2 to -2.5, I wanted to see if price is going to continue accumulating, which you can see price continued accumulating here. And then I want to see a retracement or a reversal. And you could see that we had a good reversal here. We took this low. So if you consider this as a low, we took sell stops here or sell side liquidity, and then we started moving higher. Once we moved higher, we came again into this midnight open to daily open range, and then we started chopping around here, right? And this is before even we get to our market open. So market open is right here at 9:30. You see price go down perfectly. It gives, I mean, the 6 p.m. gives a support to the price. Price expands a bit. There is no fair value gap here, right? If you see like this bullish candle that you see here, there is no fair value gap. So there is no entry technically. If you consider a 22 buy model, there's no buy model. The price again moves down, moves up, and you could see the price is consolidating. There is no fair value gap whatsoever. There is only one that I see here. But again, like I said, when you are ranging between your daily open and midnight open, you have to be very careful because the price has already made its move before New York, right? And we could see that the price moved largely in the Asian session and then in the London session as well. So I'm not expecting price to do anything in the New York session. So today's session or this market analysis, the idea was to focus on the standard deviation delivery, like how accurate it is in predicting like where the price is going to move, and then focus on the times as well, because the times can give us indication as to what is going to happen in the New York session. And we could see here that the price has a large gap between the daily open and the midnight open. If you have a large gap here, there is a likelihood that the price is just going to chop around. If you refer to like my previous videos as well, you would see that anytime we do a market analysis, the daily open and the midnight open are very, very close. So when market opens, you are either on the higher side of the daily open and midnight open, or you are on the lower side. So you can form trade ideas. And on top of it, today is Monday. So from my analysis, we did not have any opportunity. At least I did not see any clear opportunity. And sometimes when you see such markets, such choppy price action, it's better to just stay away from the markets. And again, you would ask like how to identify a choppy price action before it is going to happen. These are the conditions where you have to be careful. And the condition one is your standard deviation targets are already achieved before market open. You have made a large move before market open, and there is a significant gap between your midnight open and your daily open. So it was an interesting day today, and I think like everybody, including myself, learned a lot. Market offers a lot of learning opportunities for us as well. So today was one of those days. Well, that's all for today. Thank you for watching this video. If you have any questions, let me know. I'll see you tomorrow. Thank you.